Okay, hello everybody. Today we will be presenting our finance assignment. We are from Group 20 in section B03. So my name is Danish Haikal bin Juzaili, and my student ID is 123 130 2992. Okay, next. So this is our content. The first one will be introduction, company overview, financial analysis, interpretation of financial analysis, strengths and weaknesses, and so on. Okay, I'll pass the stage to the next speaker. Thank you.
Okay, I'm gonna talk about background and brief introduction about Genting Berhad. Genting Berhad is a typical investment and holding, typical investment holding and management company founded in 1965, incorporated in 1968, and officially entered to the stock market in 1971. The headquarters is located in Wisma Genting in Kuala Lumpur. Uh, it's comprised Genting Berhad, and it is that subsidiary companies are Genting Malaysia Berhad, Genting Plantation, and also Genting Singapore Limited, as well as unlisted subsidiaries, Genting Energy Limited and Resort World Las Vegas. And their mission statement and vision statement are, as you can see, be responsible to the changing demand of our customer and excel in providing quality product and services. Commitment to innovation and the adoption of innovative technology to achieve competitive advantage. And the vision statement is we are leading multinational corporations, so commitment to enhancing shareholder value and maintaining long-term sustainable growth in our core business. And for when they start, the founder, their name was start with Resort War. Since 1989 to 2007, and then after that, they just changed to the Genting Malaysia since 2007 until now. I can go to the next slides. Company overview and positioning. Ganyan Berhad focus on the leisure, hospitality, and entertainment, such as resort, hotels, gaming, and entertainment, and also travel-related service. Up to the industry, Ganyan Berhad have like numerous competitors, including Sunway Group, Sunway Lagoon, Bajayat Corporation, in like in Malaysia, and then internationally they have a Las Vegas Sand, Shangri-La Asia, and however, the group revenue grow 7.4 billion in third quarter of 2023 and improved by 20% compared to 2022 third quarter. The majority of revenue contributed by the leisure and hospitality, deviation by ensuring competitive advantages rather than competitor. For example, core expertise in strong brand recognition, exists in strategic location, and also innovative technology and wide service offering, market positioning. The group target high standard of foreigner visitor by providing premium accommodation, luxuries, entertainment, relaxing theme park, and other services. Recently, it was award the Genting Berhad was awarded by Malaysia most successful sustainable value brand by Malay Association of Theme Park and Family Attraction in 2023. Can you go to the next slide? And the rationale is that they're trying to enter to the market which has strong demand, strong customer demand, and there are numerous competitors where customers seek for better experience and quality product. So they enter to the market and trying to shake it up by investing large amount than competitor, and like offering cheaper price, premium experience to the customer. For example, entering to entertainment and gaming factor, they enter the market with the newest, modest technology, creative and innovation, focus on customer needs and want to give better services and product. They are surprisingly embracing to the market to technology all the way from plantation and energy by operating biotech factory in China. Company justification is because of their technology advances and innovation, and also their significant diversify investment and capital management. Another one would be Genting Berhad consistently include increased financial performance year after year, with a strong market share, and the company reputation for excellence and client satisfaction highlight its trustworthy and knowledge. I pass to my friend.
Okay, I'll be continuing the presentation. So now I'll be talking about financial analysis. Um, from this financial analysis, we have five ratios. So the first one will be liquidity ratio. So the first one is current ratio. It varies for 3 years from 2001 until 2003. So for 2003, you guys can see at 1.96, 2002 1.1, 1.01, and 2001 is 1.81 for the current ratio. So technically, the Genting Berhad's current ratio improved from 1.01 until 1.96, indicating a significant enhancement in its liquidity position and its ability to cover short-term liabilities. So the next one will be quick ratios. The on 2023, 1.98 and 1.91, and 22, 0.97, 2021, 1.48. So Genting Berhad's quick ratio improved from 0.97 until 0.9891, reflecting a market enhancement in its liquidity and ability to cover immediate liabilities with readily available assets. The last one will be cash ratios. 2023, 1.24, 2022, 0.81, 2021, 1.52. So this shows that sufficient cash to cover current liabilities, and the second ratio signaling a potential challenge in meeting short-term obligations with available cash. So the next ratio will be activity ratios. So the first one is inventory turnover ratios. So the ratio and the years can be seen from the chart. So the inventory turnover ratios of 42.58 and 43.89 indicate a very efficient inventory management and strong sales performance, while the ratio of 31.61, though still efficient, suggests a slightly slower inventory turnover in comparison. The second one is accounts receivable turnover ratio. So the account receivable turnover ratios of 16.65 and 15.87 indicate that the company is efficiently collecting its receivable quickly, while the ratio of 5.82 suggests a slower collection period, possibly indicating issues with credit policies or customer payment behaviors. The next one is account payable turnover ratios. So the ratio of 2.73 and 2.48 suggests that the company is relatively prompt to paying its suppliers, whereas the ratio of 1.61, which is in year 2021, indicates a slower payment cycle, potentially pointing to extended credit terms or cash flow constraints. So the next one is the asset turnover ratios. This ratio represent 0.14 and 0.34 represent less effective asset utilization, and the next one will be fixed asset turnover ratios. So these ratios show how well the business uses its fixed assets to produce income. Larger ratios correspond to higher levels of efficiency. So the next ratio would be debt ratios. We have debt to equity ratio, the first one. So from this ratio, this tells us that the Genting Berhad is in less debt and is less risky for lenders and investors. And the next one is debt to asset ratio. So it's essential to interpret this ratio in the context of the company's overall financial strategy, industry standards, and economic conditions to understand their implications fully. The next one would be debt ratio. Debt ratio shows how much of the company's assets were financed by debt, and a decreasing ratio suggests less reliance on debt, potentially indicating improved financial stability and lower risk. Next one is interest coverage ratio. Um, the variation of 3 years shows how well the company can pay its interest expenses with its operating income. It indicates changes in financial health and risk over time, with higher ratios suggesting a stronger ability to cover interest payments. Last one will be debt service coverage ratio. So this shows the company's worsening ability to cover its debt payments with its operating income, indicating increasing financial risk and potential challenges in meeting financial obligations. So the next ratio is profitability ratio. First one is ROE, which is return on equity. So it indicates levels of profitability or loss related to shareholder equity over time. But with a negative ROE in year 2021, suggesting a loss. The next one is ROA, which is return on asset. So varying levels of profitability or loss from the company's total assets over time. But with a negative ROA in year 2021, that shows loss. The last one will be profit margin, indicates the company's varying levels of profitability or loss as a percentage of total revenue over time. But with a negative margin in year 2021, it shows loss at that year. The last one will be market ratio. The first one is EPS, which is earnings per share. So this show the company's earnings per share with positive values indicating profit and negative values indicating losses per share over time. Next one is PE ratio, which is price earning ratio. So this tells how much investors are willing to pay for each dollar of a company's earning, indicating its valuation and investor expectation for future growth. By the year 2023, investors are willing to pay a higher price for each of earnings due to a higher ratio, which is 388.235. The next one is PS ratio, which is price over sales ratio. Shows how much investors are willing to pay for each dollar of a company's sales revenue, providing insight into its valuation based on sales performance. So ratio in year 2021 typically tells us that investors are willing to pay a higher price for each dollar of a company's sales revenue. The last one will be market to book ratio. So this tells us how a company's market value compares its book value, indicating whether its stock is perceived as overvalued or undervalued based on its asset worth. The lower ratio in year 2021, which is 1.7257, typically indicates that a company's stock is trading at a lower price relative to its book value per share. I think that's all for me. So I'll pass the stage to the next speaker. Thank you.
So my name is Lim Kafu, and I will present about the interpretation of financial analysis. So we compare the Genting Berhad with the Berjaya Corporation Berhad. So for the first one, liquidity ratio, the current ratio of Genting Berhad and Berjaya Corporation Berhad are both consistently strong and above 1. So indicating strong liquidity and efficient management of short-term asset, respectively. Lower ratio below 1 indicate potential liquidity issues and the need for better working capital management. So the next one is quick ratio. So the financial health of short-term liquidity of Genting Berhad are continuously shown by strong quick ratio above 1. But Berjaya Corporation Berhad quick ratio below 1 indicate possible difficulties in achieving short-term liabilities with its most liquid asset. So the next one is activity ratio. So comparing Genting Berhad to Berjaya Corporation Berhad, the second company has significantly lower accounts receivable turnover percentage, and suggesting that the other company is more successful and managing credit sales and recovering receivables. So for the account payable turnover ratios, Genting Berhad's assets turnover ratio show a declining trend from 0.35 to 0.14, indicating decreasing efficiency in using assets to generate revenue. While Berjaya Corporation Berhad, with a higher ratio of 0.45 and some missing data, initially demonstrates better asset utilization compared to Genting Berhad. So moving on is debt ratio. The first one is debt to equity ratio. So Genting Berhad's debt to equity ratio trend to downwards from 0.8009 to 0.7803, then to 0.7279. And Berjaya Corporation Berhad's ratio show a marginal decline from 1.36 to 1.17. So suggesting that both businesses are steadily lowering their debt loads over time. So next one is debt to asset ratio. While Berjaya Corporation Berhad debt to asset ratio show a slight decrease from 0.38 to 0.35 and then remain stable at 0.35. Then Genting Berhad's ratio show a gradual decline from 0.4447 to 0.4213. So this data suggests that both companies are managing to reduce their debt levels relative to their asset over time. So next one is profitability ratios. So for the first one is ROE, which is return on equity. So Genting Berhad's ROE fluctuates from 0.0477 to 0.0053, then rise to 0.4213, while Berjaya Corporation Berhad's ROE improved from negative 1.80 to 0.88 before dropping sharply to negative 7.24. So Genting Berhad's more stable performance compared to Berjaya Corporation Berhad. So the next is return on asset, which is ROA. And Genting Berhad's ROA declines from 0.0265 to 0.003, then drops to negative 0.0199. While Berjaya Corporation Berhad improved from negative 0.51 to 0.26 before falling to negative 2.19. So indicating unstable asset efficiency for both companies, with Berjaya Corporation showing greater volatility. So the last is market ratio. So the first one is earning per share. So Genting Berhad's EPS fall from 0.0119 to negative 0.0187 to 0.0855. But Berjaya Corporation Berhad's EPS rise from negative 2.09 to 0.98 before plummeting to negative 7.63. So suggesting substantial earnings volatility for both businesses. So for price earning ratio, Genting Berhad Genting Berhad evidenced by the PE ratio changing from 388.235 to negative 54.62, and inconsistent data for Berjaya Corporation Berhad, which shows a PE ratio of 2.91 in one instance and is unavailable for the remaining periods. So for the strength for Genting Berhad, so the first one is decreasing debt to equity and debt to asset ratio. So Genting Berhad's decreasing debt to equity and debt to asset ratio show a concerted effort to lower debt levels in relation to equity and total assets. And the second strength is improved return on equity, which is ROE. So Genting Berhad's improved return on ROE on equity shows that the firm is earning larger profits compared to its shareholders' equity, demonstrating effective asset management to increase profitability. And this indicator is important because it indicates how well the firm use investor capital to create earnings. Now I'll pass it to Danish.
Okay, for the weaknesses, first one is negative earnings per share. So, negative EPS for Genting Berhad indicates that the company's net income is insufficient to cover its outstanding shares, resulting in a loss per share. The situation often signals financial difficulties such as decreased income, rising costs, or one-time charges that outweigh operation earnings, lowering shareholder returns. Next one is volatile return of assets. Genting Berhad's unpredictable ROA reflects different efficiency in producing profits from total assets over time. This fluctuation might be caused by changes in income, cost, or asset prices, hurting the company's ability. I'll pass it to the next person.
Okay, next is financial evaluation. So first we're going to talk about liquidity. So Genting Berhad have strong liquidity position reflected in high current and quick ratios. And then current ratio of 1.5 times indicates ability to cover short-term obligation comfortably. Next, profitability. So robust profitability metrics with a return on equity ROE of 50%. Then return on assets ROA stands at 8%, highlighting efficient asset utilization. Next, third is we will talk about debt management. So moderate debt levels with a debt to equity ratio of 0.6 times 0.6. And then interest coverage ratio of 5 times demonstrate the ability to meet interest payment comfortably. Last is market performance. Strong market position with consistent revenue growth averaging 5 times annually. Competitive advantage in the leisure and hospitality industry with diversified revenue streams. Next. Next slide. Sorry. Okay, next recommendation. Investment attractiveness. Genting Berhad appears more attractive for investment due to its stronger liquidity, better operational efficiency and superior profitability metrics compared to Berjaya Corporation Berhad. And then grow prospects. Genting Berhad higher profitability ratios and market valuation metrics. EPS, PE ratio indicate favorable growth prospect. The company's efficient use of assets and ability to generate higher returns on equity and asset are positive indicators for future growth potential. Last, competitive positioning. Genting Berhad financial health and efficiency metrics suggest a strong competitive position within its industry, potentially allowing it to capitalize on growth opportunities more effectively compared to Berjaya Corporation Berhad. Next slide. Okay, last is our conclusion. So Genting Berhad emerges as a strong investment opportunity supported by its robust liquidity, efficient operational practice, and superior profitability metrics. The company ability to manage debt prudently while achieving high returns on equity and asset underscores its financial resilience and growth potential. With strong market confidence reflected in higher EPS and PE ratios, Genting Berhad is well positioned to capitalize on future opportunities. For investors seeking stability and growth, Genting Berhad presents a compelling choice backed by solid fundamentals and strategic market positioning. So that's all from us. Group 20, thank you.